South Florida's real estate market is sizzling, but is it just too hot to handle? Miami's home prices are soaring, inventory is scarce, and buyers are flocking from high-tax states, creating a perfect storm of demand. Yet, with mortgage rates spiking and affordability waning, some are starting to whisper, "Are we in a bubble?" Dive into the video and find out if South Florida's market is a golden investment or a ticking time bomb waiting to pop. The hot seat, Miami topping global bubble risks. Miami's position as the riskiest real estate bubble in the world reflects its meteoric rise in property values. UBS Global Real Estate Bubble Index recently ranked Miami above all other cities, citing a particularly high likelihood of speculative risks. Property prices in Miami have surged at an unprecedented rate since the pandemic, with median home prices jumping 40% over the last 2 years. This increase is fueled largely by out-of-state buyers, especially from high-cost areas like California and New York, seeking tax benefits and lifestyle perks. These conditions have intensified competition for homes, driving Miami's average property value up to approximately $596,000, over double the U.S. national average. Miami's home equity gains also outpaced those of other major U.S. cities, averaging $533,955 in equity appreciation for single-family homes purchased around 2009. This boom has led economists to closely monitor for signs of a potential correction as the city grapples with sustainability questions amid this rapid price acceleration. Limited inventory, high demand, the recipe for rising prices. Limited housing inventory in Miami and the broader South Florida area has intensified demand, creating a fierce seller's market. As of October 2024, Miami's active listings sit at around 14,277, which is 42.2% below historical averages despite a 50.8% year-over-year increase. This shortage is evident as inventory levels remain well below what is considered a balanced market, where 6 to 9 months of supply is typical. The current supply of single-family homes hovers around 4.7 months, significantly below balanced market thresholds. This shortage pressures buyers to bid above asking prices, often foregoing contingencies to secure a property. Experts point out that the shortage may persist due to high construction costs and strict zoning regulations, limiting new builds and making it difficult for supply to keep up with surging demand. This dynamic is especially impactful for middle-income families, who find it challenging to compete in a market increasingly dominated by wealthier out-of-state buyers. Interest rates. The double-edged sword. Interest rates in 2024 have reached new highs, directly impacting South Florida's real estate market dynamics. Throughout 2024, mortgage rates have fluctuated between 6% and 7%, increasing the monthly mortgage payment significantly for buyers. This increase is a direct response to the Federal Reserve's efforts to curb inflation, making housing less affordable for many, especially in mid-market price ranges where buyers are already stretched. According to recent reports, even a 1% increase in mortgage rates can raise monthly payments by up to 10%, a considerable strain on prospective buyers in Miami, where home prices are already high. However, many analysts predict that the Fed may moderate its rate hikes by late 2025, potentially leading to a slight decline in mortgage rates. This possibility could motivate some buyers to act quickly before rates climb further, adding urgency to an already competitive market. Luxury market, resilience in the face of storms. The luxury segment of South Florida's real estate market, which includes homes priced above $1 million, remains exceptionally resilient. Despite economic uncertainties, demand for luxury homes in areas like Miami Beach and Palm Beach remains robust, driven by affluent buyers. These individuals are often attracted to Florida's favorable tax environment and high-end amenities. Even with rising interest rates, cash purchases dominate this market segment, with cash buyers comprising about 70% of high-end transactions. Additionally, the rise of remote work has encouraged wealthy individuals from across the U.S. and internationally to settle in South Florida, further inflating prices. Analysts suggest that as long as Florida maintains its tax advantages and offers luxury-oriented development, demand for upscale properties will continue to thrive. Affordable housing crisis, a persistent challenge. While South Florida thrives as a luxury destination, the affordable housing sector faces acute challenges. Many residents and workers are finding themselves priced out of communities they have long called home, partly due to the influx of high-income buyers from other states. Miami's median rent has spiked by nearly 28% over the past 2 years, making it increasingly difficult for working-class families to find housing within budget. Florida's Live Local Act has aimed to address these challenges by incentivizing developers to include affordable housing units, but its impact is yet to be widely felt. Critics argue that the program may not sufficiently address demand, as most new developments are still primarily focused on luxury buyers. Without more robust initiatives, South Florida risks losing essential workers who cannot afford the cost of living, potentially impacting local economies. Vacation rentals, a profitable yet controversial arena. In South Florida's popular tourist destinations, vacation rentals remain an enticing investment opportunity for property owners. Cities like Miami Beach, Fort Lauderdale, and the Florida Keys attract millions of visitors annually, making short-term rentals profitable year-round. Platforms like Airbnb and VRBO report high occupancy rates, especially during the peak winter months. However, the regulatory landscape for vacation rentals is complex and varies widely by city. Miami Beach, for example, enforces strict zoning rules that prohibit short-term rentals in most residential areas, while Fort Lauderdale maintains more lenient policies. This patchwork of regulations can create challenges for investors who must navigate local laws to avoid potential fines. Despite regulatory hurdles, demand for vacation rentals continues to grow, especially as remote work allows more people to adopt a work-from-anywhere lifestyle. Commercial real estate, mixed signals in the Sunshine State. South Florida's commercial real estate market is sending mixed signals in 2024. The industrial real estate sector, including warehouses and distribution centers, is experiencing a boom due to Miami's strategic position as a trade and e-commerce hub. High demand for warehouse space has spurred new developments, with vacancy rates remaining low in areas such as Miami-Dade and Broward counties. Conversely, the office market faces challenges as many businesses continue embracing hybrid and remote work models. Traditional office spaces are becoming less popular, leading developers to pivot towards co-working and flexible spaces, particularly in high-demand areas like Brickell and downtown Miami. This shift reflects broader trends in workplace flexibility, which are reshaping office real estate needs across the U.S. Migration trends, fueling Miami's growth. South Florida's population growth continues to fuel real estate demand, particularly in Miami. Over the past few years, Florida's low tax rates, warm climate, and lifestyle amenities have attracted an influx of residents from high-tax states such as New York, New Jersey, and Illinois. Between 2020 and 2023, Miami-Dade County saw one of the highest population growth rates in the nation, adding to the demand for both residential and commercial properties. This migration is not only driving up property values, but also straining infrastructure and resources, raising concerns about sustainable development. Additionally, the high demand for housing continues to outpace supply, leading to higher prices and bidding wars that challenge both buyers and local government. Seasonal shifts, winter snowbirds keep the market buzzing. As the winter season begins, South Florida's real estate market sees a surge in demand driven by seasonal residents, or snowbirds. This demographic, which includes retirees and second home buyers from northern states, traditionally flock to Florida to escape harsh winters. October through March marks the peak season for real estate transactions, particularly for properties in tourist-friendly areas like Palm Beach, Miami Beach, and Fort Lauderdale. This seasonal demand not only drives up property values temporarily, but also fuels competition among buyers, especially in the luxury and vacation rental markets. Local real estate agents note that these snowbirds often make cash offers, providing sellers with quick and attractive sales options. To burst or not to burst? The verdict on the bubble. The question remains, is Miami's real estate market truly in a bubble? While high demand and limited supply suggest potential risks, some analysts believe that fundamental factors, such as tax incentives, population growth, and international appeal, may sustain the market's momentum. However, experts warn that sharp interest rate hikes or regulatory changes could temper growth or trigger a correction. Factors like affordability issues and mounting inventory shortages create a delicate balance, meaning that even minor shifts in demand or regulation could impact the market significantly. For cautious investors, the key will be monitoring these trends closely as they consider whether South Florida real estate offers opportunity or risk. And that's the inside scoop on South Florida's real estate market. Is it a golden opportunity or a bubble waiting to pop? Only time will tell. If you found this deep dive helpful, give it a thumbs up and let us know your thoughts in the comments. Don't forget to subscribe for more Few True videos. Thanks for watching, and we'll see you in the next video.